average, and an average that's calculated properly based on just bills. Okay, it'll never go negative. It never does what all these other systems seem to do. Okay, so it's a properly calculated average. Okay, and essentially this routine here, this stock valuation routine, is to prove our stock value. Okay, where average costed items are costed by going quantity left in stock times the average cost. Okay, if it was a standard costed item, it would go quantity left in stock times the standard cost. Okay, if it was a FIFO item, okay, it would actually be costed based on the quantities left in stock of the GRNs or adjustments in or credits back, yeah, for a particular item. So we can see here that the unconfirmed cost, let's say here, this GRN was 15. Okay, now if there was no confirmed cost, like let's say the purchase invoice in for it, okay, it would go 20 times 15 is £300. Okay, so that is the actual value of that item. Okay, if we have a purchase invoice in though for that quantity left in stock, then it would use that. Okay, so you can see here that it's actually using the other there, but the value then is £1,132.70 rather than 1140. Okay, so what it means is on FIFO costing method items, okay, we would use this individual makeup, okay, the actual quantities that we've got left in stock on the GRNs adjustments in that we actually have in stock, okay, and then what happens is it adds all these up and it comes to a total. The total is then put there, then it looks at the inventory control account, okay, on the nominal, and it says what's the real value of that, because when you do a cost of goods sold posting at average or whatever, it obviously reduces our inventory control down, yeah, and puts it into the profit and loss as cost of goods sold. But that's the average. So what we're doing is we're doing a FIFO tidy up here. Okay, so what we're saying is the actual value of our inventory control account should be £75,000. It's 236 pounds. Yeah, so it's proposing a journal to put it right. Okay, and that journal would be to increase the inventory control account by that amount and take away cost of goods sold from that amount. And that's it. So very, very simply and easily, we've proved our stock valuation, okay, and we've put our cost of goods sold exactly right for FIFO, average, LIFO, and standard cost. Okay, well, while we're on the subject of standard cost, obviously it does that properly. The standard cost basically, it puts them into stock at standard cost. When the bill comes in, it obviously posts the price difference, all that sort of stuff. Okay, so I'm going to reevaluate. And what it does is it saves that, it posts the journal, and obviously it creates a report. Okay, so when I look at the list of stock value valuations, and the accountant says to you, why did you post that journal to change your inventory control account and update your cost of goods sold? But you can say, well, that's why I posted the journal, because the value of my stock was this. Okay. These are two very important points. Yeah, we really went back to plain paper on these. Having used an awful lot of systems, I've got an awful lot of experience of other systems. These were two areas that, well, were never right, essentially. Well, in my opinion, never right. But a lot of our support calls were about this as well. About foreign currency not balancing or not being right, or my stock not being right. Well, here we have it. From a support point of view, you direct them to these routines, and from a kind of customer point of view, you prove your figures any minute of the day you want. Okay, before I go into kind of chart of account, what I want to do is show you the financial layout setup. Okay, so you can have as many financial layouts as you like. Okay, and one of the things I want to get across is that some systems on the nominal codes have like categories, okay, and essentially that means that you could only really ever have one stationary layout. What we did was we said, right, if we've got Sales UK as a heading, okay, you can basically have whatever codes, whatever nominal codes you want to appear in that list. In that category, so you can just add them by clicking on there, clicking on another one, say OK. That's it. You've added it. Now, when you set up your layout, you decide whether it's an account type, a summary, or just a text line, or it's a profit and loss summary. Okay, so obviously this is a account type. I've got here something called indents. Okay, so you can indent something or not indent it. Now, if you indent it, it will automatically put a subtotal. Um, when I show you the actual chart of accounts, this will become clearer. Okay. Now, what we're also saying here is it usually a debit or a credit? Okay. So sales are usually credit balances. Okay. So if I want them to appear as a positive on my profit and loss, then I have to say they're usually going to be a credit balance, because if I don't, then obviously it will display it with a negative. Okay. My little thumbs up button here, what it actually does is it tests. Okay, it tests my layout for me, and it says you've duplicated some accounts. And obviously, I just added that 4,200. So obviously, it's telling me that I've obviously got that as a duplicate. But the really nice thing about it is it tells me where it's duplicated as well. So I'm not having to kind of go through and find it. It's which one am I going to take it out of, and also it reports to me accounts that are not reported. Remember, we set up that 40,000 account, so it's telling me that that isn't in the layout. So obviously, my profit and loss won't balance with my balance sheet. Okay. Okay, so let's just come out of there and look at the chart of account. Okay, so this is for interrogating your profit and loss, your trial balance, or whatever. Okay, so the first view is trial balance, but you've obviously got all the layouts that you've actually made up, your profit and loss layouts and your balance sheet layouts will all be there as well. Okay, just stick to trial balance at the moment. You've also got a filter for this month and the budget this month and the last year this month. So obviously we're comparing this month with the same period last year. This month and the financial year to date, the year to date versus the budget year to date, the year to date versus the last year to date as of this point, and the period. Obviously, you can compare periods. So you can say period 1, 2, and 3 last year, compare it with period 1, 2, and 3 this year. Okay, so let's look at an individual nominal code. Here we have the code, the description, this month budget, the variance. We've also got account groups, so you can see that so let's just expand this a little bit more. I can actually put grouping on here, so group by box, grab that sub box there, and so now I've kind of grouped it by subgroup, current assets, liabilities, or whatever. Okay, I'll just put that back. Okay, so let's pick on 4,000, which I know is a sales nominal code, that one there. Okay, as you can see, the actual is 1171.24. The budget was that, the variance. Okay, so let's go to account detail. So I can see for sales, the brought forward balance, the current balance, debit, credit, and the real balance. I can see graphically actual budget and variance with the actual figures. I can see it for this year, the current year I'm on, the current fiscal year, or any other year. I can do fiscal year analysis comparisons. Okay, I can also set up my budgets here. Okay, so here's a budget, 12,000. Okay, but if I want to change that and say, well, let's make it 24,000. Obviously, I need to put a negative in because these are credits. Okay, so there it is, it's changed. By clicking that little button there, it'll allocate it across.